Hello investors, my name is Savannah Kerman here with Mountaineer Bike Co. and this is my team. So first we have Mackenzie Capito, who is the VP of Accounting and Finance, Brooke Dilger, who is the Sales Management VP, me, Business Analytics VP, Kaden Berry, VP of Marketing, Sam Welliver, VP of Manufacturing, and Piper Kirchhoff, VP of Human Resources. So today we're going to talk a little bit about our executive summary, and then we're going to touch into our past performance, then go into our strategic analysis, then our strategic plan, tactical decisions, financial ask, and what's in it for you investors. So going on into our executive summary, our mission here at Mountaineer Bike Co. is to provide a high quality and highly personalized experience for customers while partnering with the surrounding communities to protect natural resources and create value for all shareholders.
Now, looking at the past performance for Mountaineer Bike Co., our market share right now is at 28% overall. And we're currently the leader within mountain bikes at 46%, and we have a strong presence within recreation bikes at 33%. So our revenue right now is we're at $400K approximately, with a gross profit margin of $216,000 within Q3. Also, with our financial strength, we're debt-free right now with around $400K in cash and $1.2 million in certificates of deposit, which we've been saving to invest in research and development and system improvement opportunities, which have only come available within Q4 so far. So with our operational excellence as well as we're industry-leading marketing effectiveness and manufacturing productivity. And our reputation is currently, we have the highest stakeholder reputation with 64 and a top cumulative balanced scorecard performance with 1.837.
So for strengths, we have a strong early market performance with at least a third of the market share in both recreation and mountain. This is thanks in part to our clear product differentiation with a premium mountain bike and more affordable recreational bike. But we do still have some weaknesses. In Q3, our company had stockouts because we didn't expand our fixed capacity earlier on because we thought our initial investment would pan out a lot longer than it did. We will also have additional stockouts in Q4 because the new printers won't be up and running in time to account for the additional demand. We do have a lot of opportunities ahead though. In quarters 5 and 6, we're going to seize that opportunity to enter into new markets and open more stores. Along with that, we're going to use our extra capital to invest in new research and systems improvements and expand into the speed bike market to match our competitors' offerings. That being said, we do still have some threats, with competitors offering a broader product line leading us to have to play catch up, along with other companies entering the New York City market before us, which could further impact our market share and cause us to fall behind.
Next, moving on to our strategic plan, we came up with a plan for each one of our roles in the simulation. First, starting off with sales, we want to align sales forecasts with production capacity. This would include us preventing future stockouts like we had in Q3. Moving on to marketing, we want to refine our brand positioning and improve ad compliance and quality. We want to market our mountain bike as premium, high performance, and our recreation is affordable and high quality. Moving on to manufacturing, we want to expand fixed capacity and prevent future stockouts, like I said, with the sales role. HR, we want to improve compensation and benefits in order to improve employee satisfaction and increase productivity.
I'm going to start with finance because that's the foundation for the rest of the decisions that we'll be making. Our primary strategy when it comes to finance is to invest as many of our financial resources as possible into competitive advantages for quarters 5 and 6, while still maintaining a cash reserve to ensure that we don't need to take out any emergency loans should the actual demand in any of the markets be lower than our sales projections. We'll be using these investments to increase manufacturing's fixed capacity so that we can better take advantage of the available demand in all of the markets that we're present in quarters 5 and 6. We're also investing in significant research and development on new technologies that can then be integrated into our product line to increase the quality and value that customers receive. And then finally, investing in systems improvements. Now, with systems improvements, we're focused on 4 primary areas. Environment is the top one in line with our mission. And then we're also investing in quality control to ensure high quality products that are reaching the market. Improvements that will improve worker satisfaction and decrease turnover. And then finally, reinforcing community relationships in order to maintain our brand's high reputation.
Brand strategy with Alpinistas as our premium mountain bike and Allegria as our more cost-sensitive item in the recreation section. So, demand-driven expansion has been our big thing. Right now in quarter 4, we're looking at just over 1,600 in demand. We're expecting stockouts, like Sam said, off of quarter 3 and into quarter 4. We've now turned the corner on that. As you can see in this chart, Q5 and Q6 we're expected to meet our revenue and our demand right at about the same spot. So 4.5 million expected in quarter 5 and quarter 6 up to 8 million. And then strategic investments has been a big opportunity for us. So earlier in the simulation, quarter 2, quarter 3, we kind of found some mid-level cost improvements in R&D that we can make to our products. Looking back, we may have changed that, may not change that if we could do it over again, but with funding, through the investment process, we're looking at upping the R&D to making sure that our product can compete with the higher level products that are out there at our same costs. So marketing and digital acquisition has been a big opportunity too. We had some really high fidelity experiments through Q2 and Q3, kind of sparsing our marketing materials across the board into some magazines that maybe wouldn't be best for our market, but we wanted to see to give us a baseline benchmark of what we should be doing with our marketing strategy moving forward. Retail and sales force expansion is also going to be huge for us moving forward. As we've learned so far, moving into New York City, adding a new bike line, it's going to be very imperative for us to make sure the sales force is right, to reduce stockouts, hopefully eliminate stockouts, and make sure that we can keep building our revenue sustainably and efficiently. Now on to capital allocation and operational leverage. So our marketing scale up, we're projected to only be growing our marketing budget by $70K through quarter 6. Which is a good sign because our revenue is still jumping up. That means we can bank on our brand, our manufacturing, and our planning so far to be able to grow that revenue without boosting our marketing budget up. That is one thing we'd like to talk with VCs about though, is see if we can match the 7 to 10% of revenue threshold that most companies sit at. Well, right now we're only at 2.5% of our revenue on ad spend. Our retail and distribution growth, we've talked about it already obviously, but the New York City expansion, we are expecting 32 sales reps by the end of Q6, and that's across the board. So going from 19 now to 32 Q6. So our product scaling, our capacity is sitting right now at just over 1,500. We're hoping to have just under 7,000 units of capacity as we move forward. Demand, the same way. We ran into a couple stockout problems in Q3, expecting some in Q4, so we want to make sure that our capacity is hitting above our demand each way as we move forward and turn that corner. Efficiency improvements, our unit cost stabilization has been really good. One of the big things we focus on is sustainability and efficiency. So we want to make sure that even throughout all of our R&D, all of our marketing, any cost of goods sold expenses, that we can keep our costs at a reasonable level for our consumers and so we can compete in the market. To wrap things up, we're still expecting a 4.7x our revenue while controlling our cost structure and making sure that things can be improved and scaled in the future.
So after everything that we've talked about so far regarding our past performance, our strategic plan moving forward, and our projections, we're asking for a $2.5 million total investment at around $140 per share. To give you a little insight into how we plan to use that $2.5 million investment, first off, in quarter 5, we'll use $1.5 million of that to invest in superior carbon fiber material. This will mean that moving into quarter 6, we have the most advanced technology for the bike frame itself, which is really important to our primary target market of mountain bikers because they need a light, high quality, and rugged frame that will not break on them when they're competing in their sport. And they're willing to spend a lot of extra money to achieve that. Additionally, for the rest of the $1 million, we plan to use this to expand manufacturing capacity even further in the event that demand is higher than anticipated, to increase our marketing budget to further increase our demand to meet that capacity, and then finally to invest in systems improvements specifically to improve our relationships with the communities around us and to meet our company's mission of reducing our environmental impact. All right, so why should you invest $2.5 million? And specifically, why should you invest it at $140 per share? Well, primarily you should invest it at $140 per share because we can reasonably predict that we will be able to 4 times your money, taking that $2.5 million investment and turning it into $10.25 million. Now, a little bit of background on how we got those numbers. For a reasonable increase in demand in quarter 6, as well as all of the other improvements that we've been able to make and improve profits because of investments in research and developed technologies, we are looking at a $2,743,291 net income in quarter 6. This increases our earnings per share to $55 and leaves us, when it comes to $140 per share, at a 410% return on investment. Thank you so much for taking the time to review our pitch today, and we look forward to further negotiations.